all new age stocks in that sense. Raunak Onkar is with us, co-fund manager, equity and head of research at PPFAS Mutual Fund. Raunak, good afternoon. Great to have you with us here. Thanks very much for your time. Days like yesterday come. I mean, it's a reminder that it's not a one-way street. Sometimes there is some give back as well. What did you do at the fund yesterday? Were you all, was the team Buddha-like, just watching what was going on? Or did you react, do something, buy something which was sharply lower? What was the reaction function yesterday?
Thank you, Prashant, for inviting me again. So I think you mentioned it correctly that these are reminders that ups and downs are a feature of the market. And we should not be perturbed just because the market suddenly fell or suddenly went up. So interestingly, we have a list of companies we keep monitoring. And within that, we keep buying. So what we actually did, you will come to know in the fact sheet of the November ending month. But the laundry list of companies continues to be there. If something is of reasonable valuation and it's in our target radar and it comes in that price range, we are happy to buy it.
Do you think leadership is intact now with the PSU banks even going into 2024, the first half at least? Or do you think the run-up has been excessive and we could see some rotation change in the leadership?
So the way we have been positioned in our banking exposure has been to take exposure to the private sector banks only and on the top private sector banks. We had a few reasons in the past because PSUs, if you see over a long period of time, only a few of them really had a good operating history. And that too was not at par with some of the private sector banks. And this multi-decadal trend of private sector banks taking over market share still continues to go on from PSU banks. So in the portfolio, we've never had PSU banks, but I think the private sector banks, if you see from the COVID lows until now, most of the balance sheets have been very clean. The companies have a very long runway of growth. And if you see some of the regulations, they are in fact benefiting banks with scale. So if you have digital tools available to onboard customers, if you have a very clean balance sheet and management who understands the scalability and opportunity available, I think most of the private sector banks can play through that opportunity.
PSUs in other sectors, defense, railway, power, these are stocks which have done well in 2023. Would you bet on this cohort for 2024 too?
So we already have investments in the power theme out of the three themes you mentioned. So we own Coal India in the portfolio, we own Power Grid, and we also own IEX. So far, we have found these were the reasonable place to make when it comes to the power sector. But it was never a macro decision. It all came through a culmination of individual choices we made. So we liked Coal India independently, we liked Power Grid independently when we first bought it, and we liked IEX independently. It so happens that the theme has now gathered people's attention, and rightly so, because if you see the past decade, power sector has been the theme that was supposed to happen for a long period of time. And suddenly the last couple of years, we have seen the valuations re-rating, the businesses doing well. So it's good to see that a major sector in the market is doing well.
All right, that's interesting. As we speak, something very interesting is happening in the market. The Nifty is holding on to that 21,250 mark as a resistance, perhaps because of the call writing that is there at the 21,250 mark. And this despite the Nifty Bank having taken off. When we started the show, the Nifty Bank was an underperformer. The Nifty was sitting with a gain of 0.5% and the Nifty Bank was up just about 0.1%. But as you see, the clock struck 2:30. We saw the Nifty Bank take off. The Nifty is still straight at around that 21,250 mark itself. So that's telling you maybe a bit of the expiry factor is playing out. With the Nifty Bank having moved higher, why is it that the Nifty is not moved higher? Because a couple of stocks which are weighing it down. We have ITC, which is a fair weight on the index, which is lower. A bunch of these IT stocks also have moved lower. So, that baton has shifted from some of these heavyweights which are doing well, dragging the Nifty down. And we have Nifty Bank, which has moved higher, which keeps the Nifty unchanged around 21,250. Raunak, your thoughts on diagnostic companies? They've been doing well for the last few trading sessions. In fact, the last month or so, the management commentary that we've heard so far is that price wars are out now and they're behind them. And this morning, we got an update on Vijaya Diagnostics as well. They went ahead and bought another diagnostic company. So there is M&A in this space too. What are your thoughts? Do they make for a good investment bet now at these levels?
So if you see the long-term opportunity of medical services, diagnostics included, is quite significant. So all the metrics, if you compare to even similar sized Asian companies in terms of GDP per capita, you will see India is underpenetrated in terms of having diagnostic solutions available to citizens. So the long-term trend remains to be very strong. But ever since these companies have been listed, the valuations have been quite in the higher band. So we study these companies, we keep track of them, but so far we have not found it to be reasonably priced yet.
Okay, Raunak, you said that you'll find out in the November fact sheet what we've the December fact sheet, right? What you've done. But tell us a little bit about outside of financials. What are the other themes that you really like? I know you can't name names, but talk to us. We have your last portfolio. I mean, what you own, but talk to us about that laundry list that you spoke about, which you keep and at lower levels whenever you get opportunities you buy. So what's in that?
So most of the companies we already own, they also tend to become reasonably priced sometimes, and we keep on adding there. So last we've added is in technology services, in the foreign stocks, wherever we could deploy dividends, we have deployed over there. So we feel that a technology adoption theme is a very longer term theme, and there are multiple ways to play it. One is to directly buy stocks which enable technology services like IT services companies from India. And the other way is to buy the larger cloud computing players, the software providers who are globally listed, and they provide you a window into the enterprise spending of all these technology services. So you buy across the supply chain of technology providers. Then I mentioned private sector banks is something we keenly look at in adding. And any other stock in the portfolio, if it is reasonably priced, we continue to keep adding over there.
So that overall cap in terms of buying foreign stocks, that is not there anymore, Raunak? Or, I mean, your limit for you opens up?
No, so the limit is not opened yet. So whatever money we have already invested in foreign stocks, that stays outside. And if we at all earn any dividends, we can reinvest those dividends
that can
back
be
into the
reinvested.
shares.
Right. And you're saying that you put money to work in a company, foreign tech company, basically.
The same portfolio companies that we have, we keep adding them.
Okay.
Yeah.
You don't have Apple in your portfolio. I see that because your fact sheet says that there is Microsoft, there is Alphabet, there is Amazon, there is Meta as well. I'm surprised that something like an Apple doesn't find space in your portfolio. What's the reason?
So many years ago, we bought Apple. It was very, very attractively priced. And I think after we bought it, similar time, the news came in that Berkshire Hathaway also was buying and already bought a stake in Apple. So the price over the next few weeks shot up so significantly that we had to pause our buying because it went out of our comfort zone of buying. Then I think within a year's time, it promptly doubled. And so we thought, okay, it's a hardware player. It cannot sustain the valuations over a bit of time. The base rate of the valuation staying this high was not there. So we sold out of it. It turned out to be a mistake in hindsight. But yeah, we used to own Apple in the portfolio.
It's interesting, that's what distinguishes Warren Buffett from us mere mortals, where, he thought it was outside of his valuation zone, and understandably so, but Berkshire continued to hold it, and currently, right now, it's their biggest portfolio bet.
I think it contributes, I think about 50% of the portfolio, listed portfolio is Apple, just because the sheer performance of Apple.
By the way, look at a stock like Zensar. It's been one of the big movers. This year, it's 190%, and it's shot up 7.5%. We chatted with the management earlier this week, and one of the key things that the street likes in the last 1 year, 190% year to date, is the kind of improvement the new management has brought in. There is a new CEO on board. He took charge about a year back, Manish Tandon. So that was reason number one, a management change. Two, he brought about margin improvement. It was a low-hanging fruit. Margins for Zensar had fallen to single digits, 8.5% a year ago, and he's brought it to about 18.5%, and he wants to sustain it in mid-teens. So that's been, the value he's been able to extract in just about 1 year. And he's also looking at, improving the BFSI contribution because it's lower than the industry average. Revenue growth, too, for the company has steadied. Raunak, anything in IT or the new age tech companies that you like?
So if you think the mega caps globally are new age tech, then we already own them. And in IT, we are positioned only in terms of our exposure to large IT services companies, because they give us a very diversified exposure to all the verticals which are available and which are digitally transforming over a period of time. We would prefer to have a diversified view rather than going with niche players. So we used to own Persistent, which was a niche player in the past. We also used to own Emphasis, which was a BFSI-focused mid-cap IT services player. Most of these stocks had rallied quite significantly, and they actually went far ahead of their long-term valuation ranges. So we had sold out from the mid-cap IT companies, and now we are investing only in the large-cap IT services companies from India.
And you're still convinced about IEX, is it? I mean, a lot on the street are worried about what happens when market coupling comes about, and the fact that it's a near monopoly right now will get distributed. You still continue to hold your conviction here?
So it remains to be seen how it actually impacts. I'm very much interested in understanding how it impacts over a long period of time. There are two trends which are looking very interesting for the power exchanges. One is the network effect of the existing exchange. Can it be easily dismantled? That is number one. And number two, what is the long-term volume growth of power units traded on the exchange? So when we are seeing renewable energy becoming a larger part, it cannot be traded the way your regular thermal power is traded or with PPAs. So you need to have a shorter term arrangement, and an exchange is a good way to discover the price and make sure the allocation happens seamlessly. So that has been working very well. So we are trying to dismantle a system which is already working very well. So again, it remains to be seen how it plays out. But so far, we think that the longer term trend favors an exchange which has already been there and has all the technology and the right network connections already in place.
All right, Raunak, we'll leave it there. Thank you very much for your time. As always, appreciate you joining in, and it's great speaking with you. If you don't speak again, I wish you all the best as we wrap up this year and head into 2024. From all of us here to all of you there.
Thank you.
Thank you very much. Well, we'll take a quick commercial break here. We'll come back and we'll get you a check on what's happening in dealing rooms. Nimish is going to be with us for that, and we'll get you some near-term trading ideas with our technical experts. Stay with us.
CNBC-TV18, embarking on a quarter century of excellence.
Thank you for watching CNBC TV18. For all our top stories and news updates, follow us on our social media platforms.